in 3 years. CNN's Maggie Lake joins us now with more on this from our New York bureau. And Maggie, as we've said, the Dow Jones had its biggest jump of the year, up 400 points. Is this an early Christmas present for investors and traders?
Lynda, it is, with a big bow on it. It has been quite a week and such a different feeling from how we started out December. There was so much anxiety about global growth, about what sinking oil prices were going to mean. I think we have a chart if we could show that. It was looking like we were going to be in for a really difficult ending to this year. There was a lot of volatility and swings and a big drop, as you could see. And then look at that rebound just this week. And it is all thanks to Janet Yellen and her colleagues at the U.S. Federal Reserve, the central bank, letting investors know that they are going to be patient in normalizing policy. And what they mean by that is raising interest rates. That is going to be very supportive for the U.S. economy. Couple that with the benefit of lower oil for U.S. consumers, and you've got what looks to be a very, very solid U.S. economy heading into 2015. And that support coming from the Fed was enough to light stocks on fire. We've had two very good days. If you look today, it's only up 26. Not surprising that some of that momentum would begin to fade, but the fact that we haven't given back any of those gains really shows you that investors ending on a confident note. There are some skeptics out there that worry how long it could last, but for now, no one is willing to fight the trend, Lynda.
And as you mentioned, the move comes after the Fed Reserve indicated there would be no interest rate rise. Was this sort of reaction expected?
You know, I think that people were unsure what the Fed was going to do. I don't think anyone thought that they were going to signal they were going to raise interest rates very soon. But the market's always going to try to anticipate the Fed. So some were beginning to think, given the fact that we had better jobs numbers, that things were strengthening, that the Fed may look to sort of get back to normal. Remember, these interest rates are incredibly low, historically low interest rates. There is some pressure on the Fed to sort of get back to a more sort of even normal stance. So some people were beginning to talk about the fact that could start to happen in the earlier part of 2015. That would raise borrowing costs and act as a little bit, if not a drag on growth, certainly not that sort of support, that gas that the Fed's been giving it. The Fed coming out and saying, listen, we're going to err on the side of caution. So it was a little bit unexpected. That's why you saw that big upswing. And frankly, traders this morning telling me, listen, there are not a lot of other places. If you look around the world, where do you want to put your money? The U.S. is looking increasingly attractive. And for that reason, you've got a lot of money pouring into stocks. Again, a lot of people thinking it looking a little pricey right here, but no one is willing to sort of pull back on the buying just yet. So we're seeing those modest gains continue through today. And some people think we're going to sort of hold on to this tone through the end of the year, Lynda.
And as you mentioned, rates have been at these historic lows, near zero since 2008. When do you think interest rates will increase?
This is going to be the question that dominates as we go into 2015. We're not worried about it now. That doesn't mean we're not going to worry about it the next time the Fed has an interest rate. And it's going to be determined really by what happens with the U.S. economic numbers. Do we see month after month a very strong job growth? And not only job growth, do we start to see wages go up? If you start to see wages increasing rapidly, that could change the game for the Fed. No one thinks that's going to happen. They're probably going to be able to sort of stay on the sideline through the first part of 2015. The other thing that the Fed is going to be watching is what's happening internationally. We have a lot of hot spots and problem spots in the global economy. Europe is still weak. We see what's happening with Russia. The Fed is not immune to that. They're watching oil prices. Does that have a fallout effect for oil-producing nations? So they're going to keep an eye on that as well and sort of take that whole picture into account. But again, that word patient that Janet Yellen used this week, so very important for market psychology. So the Fed is still going to be a friend to the market, not something they have to worry about, Lynda.
Excellent analysis. Thank you, Maggie Lake in New York. We appreciate it.
Sure thing.
And a programming note, US President Barack Obama is expected to talk about the economy, the Sony cyber attack, and other pressing issues during his year-end news conference. We'll bring you that live in about 3.5 hours at 6:30 p.m. in London. Hong Kong's biggest ever corruption trial has ended. Property tycoon Thomas Kwok was convicted of misconduct in public office. He was accused of paying millions in bribes to Hong Kong's former number 2 official, who was also found guilty. But jurors acquitted Kwok's brother, Raymond, of all charges. Still to come, Hollywood, Bollywood, maybe Vancouver, Canada.